It's very hard to watch the news these past couple of weeks and not hear about Mega Millions and Powerball jackpots, and everybody's mind starts to wonder, well, what happens if I win that lottery? In many ways, there are parallels to options markets. Basically, when you're talking about a lottery, you're talking about a low probability, high outcome event. And of course, when you start talking about lottery jackpots in the hundreds of millions or even billions, that is the ultimate high outcome event. Now, of course, that would be a very positive high outcome event if someone's lucky enough to win it. But in the options market, because you have these wide ranges of strikes and expirations, there are many ways that one can either speculate on a low probability, high outcome event, or waste a lot of money playing high outcome events with a very low probability. And this is what you have to start thinking of. One of my friends likes to say that lotteries are a tax on people who don't really understand math. And unfortunately, at some level, that's true. Particularly when you're talking about people who I see spend 20, 30, 40, $50 buying lottery tickets with a potential payout of 500, you start to wonder, what is that person hoping to gain from this? Because the odds of winning are so small, and the amount of money they win probably won't last them more than a month or two. So it's kind of a difficult event to look and see someone doing that. When I think about these Mega Millions or Powerballs, it's a different calculus. For most people, spending $2 or $4 or even $10 doesn't meaningfully change their lifestyle very much. It's an expense most people can afford to bear. But even though the odds are very much against you on a normal basis, the utility, as using an economic term, the utility of what you might win, that $100 million payout would change your life in such a meaningfully positive way for most people that you can at least understand why there's a desire to play that and why it's not completely irrational. So going away from the lottery, though, what does that do when you see low-priced puts and calls? There's a probability distribution that's attributed to options. And one of the good things is we have features on the Trader Workstation and Probability Lab and some of the other features that let you try to assert what you might think as being a reasonable probability vis-a-vis the market. And understand that people are have very difficult times estimating very low probability events. And again, you want to avoid the ones that are low probability, high outcome. Think about insurance. There's a lot of, I've always been a believer of having a high deductible policy because I don't really want to insure against something where I can afford a $500 deductible. I want to insure against the stuff that's going to cost me thousands of dollars out of pocket. So again, I think it's best to insure against that, and it's probably in many cases better to be the buyer of that insurance than the writer. Remember, if you start writing low-priced calls, let's say, and you just routinely write uncovered calls that net you a quarter of a dollar on a regular basis, you probably will over time win. The problem is, what if you write that 25-cent call and the company gets taken over the next day at a 50% premium or $50 premium or whatever? So you make tiny bits of money and then you blow up there. So that's what I'm saying in terms of avoiding it. I think so in many cases, unless you really have a view and you really think the market is underpricing some risk, you in many ways want to avoid what I would call the lottery ticket options. There are many market makers who would be more than willing to sell it to you, but they probably will do it on a hedge basis, or they can withstand the risk, and they do tend to manage risks. When market making, I'm very cognizant of what my potential loss is at any given time, and understanding that I can't make money always in all circumstances. We have to be prepared to know what our maximum loss is at any given time. Individuals tend to be much less well capitalized, and also in many ways have a much poorer understanding of what the negative outcomes could be. So I find writing uncovered lottery ticket type of options to be a risk not worth taking. On the buy side, probably also the same thing. There are so many ways that you can just give up 20 cents here, 20 cents there, 30 cents there, and over time it really affects your return. And what are you hoping to gain by that? If you really have an investment thesis that makes sense, if you really feel that the market is underpricing some risk, then it's a risk worth taking. But otherwise, I think for the most part, you really probably want to leave a lot of your lottery playing to going to the convenience store and buying a $2 ticket every so often, and leave it out of a lot of your day-to-day option trading.